Hey everyone, I'm just going to do a quick trade recap on the euro dollar that I entered last night and exited this morning shortly after the NFP announcement. So the first thing I want to start with is a little bit of pre-analysis I did earlier on in the week. I use TradingView for this particular analysis because they have a couple of extra little pattern tools that thinkorswim doesn't offer on their platform. I do mainly all of my analysis on thinkorswim, and they have a fair amount of things. Basically, everything I use is up here. But TradingView, has a lot of stuff for, they have this really neat triangular tool that I use for advanced patterns like Gartley patterns or cipher patterns if I trade those, which I do sometimes, but more or less I'm more of a structured trader, using primarily just these four things right here: trend line, price tool, which I use for support and resistance, my rectangle tool for supply and demand levels, and my Fibonacci retracements. And I don't do Fibonacci extensions too much. I kind of incorporate the extension levels that I'm looking for in my Fibonacci retracement tool. But anyways, I'm going to bring this over here and just kind of give you a little look at what I was seeing potentially happening on euro dollar. And this was earlier on in the week, so this move up here, this is a 4-hour chart. This is just a screenshot from yesterday or the day before. I don't remember exactly when it was, but we've had this strong bearish few weeks here, but we're kind of leveling out here. We're pretty much at all-time lows for the most part. Our low lows were back here, so we're coming off the lows, and this is a retracement, but we're kind of almost scooping back up, it looks like, and so this is just kind of a forecasted possibility that I saw potentially happening, and I missed this low point entry here. I'll kind of mark that up here on thinkorswim. So this is a 4-hour chart as well, and the big bullish candle that busted out of this bottom wedge, descending wedge area here, kind of almost confirmed this trajectory, at least in the short term. So this is that large bullish candle that busted out of that descending wedge. So once I saw that, after missing, there were some nice retracement or extension target areas down here. Price, this was a nice area to get long, but I missed that opportunity. Right out of 786, there's nice structure down here that has held as support and resistance, coming back up before being broken again. But I missed that trade down there. I know a few of my trading friends were able to capitalize on that move, but I missed that. That happened while I was away from my charts, and I do probably 90% of my entries manually, just because I feel like I can read price action better than just relying on a limit order. If I'm extremely confident in the level, then or super busy and my stop can be in an appropriate place, then I'll just put a limit order on. So yeah, we broke out of this, so that kind of confirmed this potential scooping pattern or bowl or whatever you want to call it, cup and handle possibility forming on EU. So I was looking for an area to get long, and we'll kind of dive into that here. I'll delete this stuff here because it's not super pertinent to my trade that I took today. So my entry, let me bring up my entries here. So my entry was right here, and my stop and my target. You can see those three there. And let me mark this up so to show you what I was seeing. So the first thing I generally do is I try and look for structure. So I had this 1.057 level, right around that 1.057 level that I really liked, and I'll extend that over to the left. And you can see, that it has held as support and resistance in the past. Especially recently, there's been really nice reactions off this level or zone. It's not going to be pinpoint accurate all the time, but you can see that the general 1.057 area has held pretty nice as both support and resistance. So that's kind of like the first thing that I like to look for in a trade. And if we move down to the 1 hour chart, I typically do my major trend lines on the 4 hour chart, and then to kind of hone an entry, I see if I can find any minor trend lines on the 1 hour chart. And the 1 hour chart's the chart that I enter on. I did the Fibonacci extension from the low point we established, and then the high at the time when it found its high and started retracing back down. And right on that 1.057 level was the 50% retracement. In addition, we had that 200 EMA right there on the 1 hour chart, and we also had kind of a little minor trend line, you could call it, that I had drawn in. So like right somewhere around there, there's a little wick high right there before retracing and breaking this level. And once I saw it break this 1.057 level, I was looking to get in there. I just needed a few extra reasons for entry, and we have this trend line there, and the 50% retracement, the support and resistance line. So I felt, with the strong move on Friday and this kind of slow, gradual retracement, corrective structure, and then this strong impulse move out of these higher lows from the lows on Friday or the end of last week, I felt this was a good opportunity to get long. So I did, and price spiked right down to my levels, got me in, dipped just a little bit below my level. I actually was able to get just under, if I fatten this up a little bit, 1.0569 half is where I got long at. In my stop, I typically always have a 30-point stop, 30 pip stop. And for targets, I was obviously expecting, once I saw the bullishness of this potential pattern formation, I was, expecting a move if this is truly going to kind of mimic the way this happened. I kind of anticipated us breaking the highs of last week, or actually earlier this week, or maybe that was Friday. I can't remember when this was exactly, but and potentially testing these highs around 1.067. If I kind of scrunch it up a little bit, you can see there's an area consolidation right there. When I did my fibs, we got a dip right down to the 50% retracement, which I typically like to see to validate any profit target extensions. We have the negative 23.6 and the negative 61.8 profit targets. I don't typically use this negative 50. I just kind of have it on there as a reference. But right at that, consolidation area here was the negative 61.8. So I felt that was a good target if we did get a nice bullish move going into NFP. And you can see right off the level, had a nice move up, kind of consolidated a little bit more, dipped back down close to it, but didn't quite get there before coming up into pre-NFP and just kind of trickling sideways for the London session. Really didn't move a whole lot, maybe like a 10 pip, that's like a 10 or 15 pip range there for several hours before NFP. This big bullish candle is the NFP announcement candle. How did I manage this trade once I was in it? I didn't move my stop until we kind of started getting up close to around these highs. And once we started wicking up past it, I went ahead and moved my stop just to essentially break even underneath these low points, and that was pre-NFP. I don't typically trade into the news. If I'm already in a trade, then I will typically keep it. If I'm in profit and I haven't had a terribly great week, then I may close it out. If I'm comfortable holding it through the news announcement, then I will. And I was up close to, I think, 30 pips at this time from my entry, which was about right there. It was kind of in between 20 and 30 pips is kind of where I was at. Well, sitting right around 30 pips. So I was, I risked 30 initially. My stops were rolled just into profit a little bit, just essentially to cover fees if we had some kind of crazy news spike. But you can see, on this, we'll even drop down lower. We really didn't get any sort of spike down right at that 8:30 candle. I mean, just a couple pips. It was pretty much all bearish, or bullish. So that was really nice to see. Sometimes you get these crazy, 50 pip long wick downs to stop people out, and then before moving on in the true direction. So it was nice to see, and after this strong push up and close above these levels, I tightened up my stop a little bit more, just up to right around 1.06 level, just underneath that, and just kind of rolled it up. Once we kind of hit this negative 23.6 and had a retracement back down to the EMAs here. I typically don't do too much on the 15-minute chart, but and actually once we kind of broke up above these levels and we're retracing back down, I looked actually to get back in at what did I have my eye on? It was 19 something. It must have been 619. 1.0619 is where I was looking to get it. Yep, right up over here. So I was looking to re-enter this trade, and it had even hit this little trend line here. It was a valid entry, but I really wanted 619. I really wanted that 61.8 to get touched, and it just didn't quite hit it. I took the fib level from that down to up to this little peak here before it started retracing, and it touched the trend line but just didn't get to the 618. So I didn't put on a second position for that. I almost did, but I didn't. And it went on up to target. We had a little stutter right before it, but it went up and hit it, and that was right at 100 pips. And I'll just bring that over here quick. You can see my entry time and all that, and this was the trade.